Dear guests, welcome to the second round of discussions here at Speaker Hall. To continue the day, I am pleased to introduce the next session, Finance in Flux, Adapting to the Winds of Change. To guide you through the session and introduce the speakers, please welcome on stage the moderator, Naeem Aslam, columnist at NASDAQ and CIO at Zai Capital Markets. Naeem, dear speakers, welcome. The stage is yours.
Thank you. Thank you. Gents, first of all, it's a plum pleasure to host you on my panel, and it is a great honor. Today, we have big range of wealth on our panel, where individuals bring several decades of experience from various parts of the industry. We'll be discussing a few different things, of course, from the perspective of brokerage companies, how they are innovating the landscape, the countries, the regions, the areas where they are going, and also some of the very interesting conversations that I'll be having with one of the panelists from the insurance perspective, which I'm sure if any of you are coming from the UK, especially or Florida or any of them, you would have seen massive surge, and that would have impacted your disposable income. So how financial innovation has really changed that. So starting from yourself, please kindly introduce yourself, how you are involved with the role in terms of financial innovations, and from there onwards we will go further. Thank you.
Hello everyone. Thank you, Naeem. Thank you, the organizers, for such another annual successful event and for inviting me to participate in this panel. I am Christoforos Anagiotos. I lead the deal advisory services of KPMG in Cyprus, which means we deal with deals, mergers, acquisitions, valuations, debt and equity financing across all sectors, but inevitably we come across a lot through the banking sector and the innovation and all that is happening around the banking sector. It's as the name of the panel suggests, it's financing in flux nowadays, and things are changing, most notably from the financial perspective. The interest rates have never been so, let's say, fluctuating in terms of expectation, in terms of actual performance, and we're discussing a while ago about the expectations for today. The Swiss bank has reduced by...
Bank of England.
And the Bank of England has now proceeded also as well. So it's interesting to see how these expectations change also the behavior of the consumers, whether these are individuals or businesses. They shop around, they seek around, they want to be much more informed about the products. And this is one of the areas where the technology comes into place and it's being increasingly more used by the various players in the sector. The technology, we've seen it has changed the barriers. If we take, for example, the Cyprus as a small...
we will go in a lot more detail about that. So
I will...
yeah. So Gary, just briefly, please. We know Interactive Brokers, and we wanted to see your role within the Interactive role and how you have shaped up the industry, please.
Sure. My name is Jerry Perez. I'm the Chief Executive of Interactive Brokers UK Limited. We started in 1993 in Germany. I was there on day one. 5 moves around the world. I'm based in the UK. And we're an online broker that enables our customers to trade in 150 market centers. Very excited about seeing innovation. Innovation has always been a habit of Interactive Brokers, and looking to be part of this panel.
5 different moves. What's your favorite part of the world in those 5 different moves?
You know, I'm originally from Chicago, and I love pizza.
Wow, okay. Okay, let's leave it to that then.
There you go.
Yeah, so my name is Hormoz Faryar. I've got an account with Interactive Brokers. I need to speak about that later on, but...
They're not giving money back?
So I work for a company called ATFX, which is one of the largest FX online brokers, and we have 2 departments. It's institutional business and retail business. My job is, I'm managing director for Dubai for institutional business, and Dubai is one of our highly fast-growing sort of offices. And ATFX started in 2015, and it's not 10 years yet, but already top 3 broker in the world in terms of volumes.
Is Dubai where they have the tall buildings, is it?
Yes, the tallest.
The tallest ones.
Hi, nice to meet everyone, and thank you for having me on the panel. I'm Alex Phillips. I work for Marsh, which is the largest insurance broker in the world. We think that insurance can play a massive help in navigating the flux in financial institutions. And I understand from Naeem you're going to be throwing me a few curveballs here today, so I'll try and do my best with well, but looking forward to the discussion.
Hi, my name is Owen Danziger. I'm the managing director at Finvasia Wealth. We're part of a broader group that has brokerage side. The part that I'm looking at or overseeing is the wealth side, which is, we feel, is the next step of brokerage. We have also brokerage in India under our group. So very, very interesting group to be part of.
Interesting. You know, speaking of wealth, we're going to start with that particular agenda. So the first question that I'm going to talk about is very much relating to what's happening right now in the market, and that is about the Bank of England's decision. And the question is very much for Gary Harmos and, of course, Orion, for you. The O would be slightly with the curveball, so it will come in a bit. But with interest rates being unchanged, that's what the Bank of England has left. Where, in your crystal balls, where do you see the interest rates moving towards the end of this year? And how your clients are positioned with that? What is your stance for the UK's economy, which is very much teetering with recession? So starting with Gary.
First of all, interest rates unchanged. However, they're at relatively high expectations at 5.25% in the United Kingdom. From the retail side, we've seen a major shift of business moving from active trading, self-investment accounts, general investment accounts, to the tax wrapper accounts, such things as the ISA, the SIP account, trust accounts. And you're also seeing that across the globe, because effectively individuals want to take advantage of parking their money uninvested and being able to look for the future. There's a lot of uncertainty being able to execute in local markets. So you see not only in the United Kingdom that because of high interest rates, what that means for our business is that you have to shift, you have to be very adaptable. This is a very large customer segment. In the United Kingdom, we're talking about $1 trillion up to play. The CAGR of it growing is probably somewhere in the neighborhood of 12% for tax wrapper accounts. You compare that to stock brokerage accounts, the CAGR is around 6%. So a lot of brokers have shifted, just like us, to go after this customer segment. Interest rates staying high, it's also going to be a big barrier for institutions to grow, to expand, because the cost of capital is a lot higher. So I think you're going to see a little bit of, let's say, pretty calm in the expansion of a lot of entities. However, there will be a shift to going after customers in the tax wrapper segment because, again, they're taking advantage of this, and we're adapting with them.
Yeah, Naeem, I think there's a few angles when it comes to the sort of interest rates right now. The high interest rates are, of course, causing the big carry trade, as you know, for all the brokers. And that's quite an interesting story, right? So high interest rates, you go long dollars and against yen, for example, and you just get paid. And this is happening, and central banks are occasionally intervening. The same could be there with pound yen. I think the expectations of interest rates are that they're going to drop later on this year. And why is that? And I think a lot of people are expecting something to happen usually because of all the indicators. Everyone's comparing that this is some kind of bubble that's about to burst. This is some kind of inflated prices in the stock market. So we will have some kind of thing happening, an event maybe, and therefore the expectations are that by September even, we will have some cuts in interest rates. I'm not so sure about it, but I think the market is looking at something like 60% chance of a cut in September.
Yeah. You're very much right. I think it's really interesting from the perspective of an opportunity from arbitrage, where one currency, there's a carry trade there. Orion, this is where I wanted to bring you in. So in the wealth creation platform where you guys are based, so there is an opportunity, the arbitrage opportunity, clearly between the currencies. The other side of the dilemma is disposable income evaporating at the fastest rate. How are you balancing these two for your clients in order to attract them and still make them invest and then sell the story that, look, this is how you create wealth?
Well, first, that's the holy grail question, to balance between those two. But when we look on our clients and what we're looking to is we're looking long term. So yes, decisions might be different September or November. My view is there's a bit of it feels like there's a bit of a sucking of liquidity coming through, and people are waiting for November. Probably the US elections are coming and people are sitting a bit and waiting to see where is this coming to. For us, long term, it shouldn't change the strategy. For us, we want to offer long-term financial instruments. So when people come to us, the impact of a change, say in September or November, will not impact what they're going to do with their money. So what we see is that a lot of the people, so take the brokerage industry. In the last 10, 15 years, it was all about excess. And I have to tell you, we've done it. You know, people can open an account in the UK, can open an account in Europe, can open an account in South Africa in 10 or 15 minutes. You know, KYC is becoming very streamlined. Everything is easy, and they can start trading. But then they come, and we see that on our copy trading, on the Zulu trade side. They come and they say, okay, I have access, but what do I do now? I don't know what to do. And that's where we feel that we can play a role, because those novice or those traders that are coming in, we can tell them, okay, one way to do is you guys can come into our platform and see what experienced traders are doing and follow them. So a lot of the things we're looking at is to solve that next stage of access. Yes, we've democratized, everyone are using that word, democratized the trading, the investing, but what's next? What's the next thing here? And that's where we're coming. I feel that on a long term, if someone looks long term, the fact that it's more around, I'll say it that way, it's more around time in the market than timing the market.
Yeah. You know, on the Zulu side, is Roaring Kitty, is not using that. Is he using Zulu trade?
No, he's not, but it could be nice to have him as a leader. But in the same way, Nancy Pelosi can be a great leader, right? You know, so no, but he's not.
Okay, Chris, coming to you. From the big boys' perspective, the 4 top firms out there in terms of the audits and accounting, what are you seeing in terms of a stance in the UK, given the challenges, as I mentioned, you know, economy is teetering with the recession. There's also conversations to have that, you know, Russia, which, as you and I, we kind of talked about, you know, produced a GDP growth of 3.3% despite having 46,000 sanctions on them. And we have a UK over here coming up pretty much on a flat line, and in the US, pretty much things different. But I wanted to understand from your perspective, because you guys do very deep surveys. How are you seeing those surveys being showing the impact of AI and all other different innovations? Are they improving the chances of the country's survival or producing better growth and efficiencies?
Thank you, Naim. Indeed, we feel that, and based on various surveys, as you said, that we are performing, it appears that companies are increasingly more investing in this technology which enables them to improve their cost efficiencies, but most importantly, and as we see from the responses, they also engage better with their clients, their customers. What we are seeing is that in order to be able to apply these technologies, you need to have robust data and a very clear and well-organized data strategy. And companies are also moving into that sector in order to be able to ensure that they comply with the regulations about keeping the data and safeguarding the information, as well as preventing fraud. And out of the global tech survey that of KPMG, which was in an audience of around 2,100 professionals, 3 out of 5 mentioned that AI is their most important tool in preventing fraud. And it's actually now going even more into detecting and remedying rather than preventive. And they are using, of course, all the powers of AI to control that. What is being evidenced is that they definitely need some employee upskilling, technological upskilling, and the greatest improvement noted in the use of technology was the engagement of their employees rather than the cost synergies that they managed to achieve through the use of technology. So we see technology being increasingly more used, but looking forward and ahead of let's say, this current environment where everything is changing, we believe that although customers will be faced with this and companies will be providing these services, the differentiator will be the value added, not the use of technology per se, because eventually everybody will be using the technology, and they will be the customers will choose based on differentiation. So we are helping companies address their strategies based on the tools that they have, the technology, not vice versa.
Now, I'm going to turn to audience. How many of you are looking or thinking or anticipating to purchase a house? If you are, please raise your hand. And how many home buyers are here? Actually, okay, few, a lot. Okay, there we go.
No one's buying a house. Is that it? That's not fault. Everyone's waiting for the crash. Yeah?
Okay, so the question for me is, because, look, I'm based between Dubai and London, and then every time I go to Dubai, there's this conversation that the best time to buy property in Dubai was yesterday, and the next best time to buy property in Dubai is today, because tomorrow is going to be again you're too late. So Alex, I wanted to ask you, is there an insurance product which can save me from a territory where we are way beyond this bubble territory, because prices are going so much to the upside?
Yeah, it's an interesting one. We haven't really looked into it much. I mean, I thought about this all day after you've mentioned it to me this morning. And I remember the very first day I worked in insurance, I thought you buy, you insure cars, you insure life and all that sort of stuff. And someone told me you actually insure the Who Wants to Be a Millionaire $1 million prize, right? And I never knew this. And when you start thinking like that, like anything's possible to insure if you know like what you're trying to insure, $1 million, how many contestants have you got? Do you want to be insured up to like the 20,000 question, or do you want the 500,000 question, or like, so in theory, yes, you could start looking at like covering the bubble, but it's like, at what point does it actually get to provide value to the customer? Like, are you talking about people's own houses? Is it real estate managers? Is it, those sorts of things, and how much they're willing to pay? But you definitely can buy kind of credit insurances and all sorts of cover around that.
Naeem, you want to find a way to short the properties in Dubai?
I would have done it to Mac a long time ago.
We've got business plan on this now. Yeah.
Short properties. Okay.
Yeah. So on the same subject, right? I think the UAE, the town that you are from, one thing was very much evident. When the flooding happened, the government came out very strongly and then instructed every single insurance company that they need to honor the insurance, they need to pay out, right? Now, sitting where you are, and then dealing with the properties such as Florida, and as you mentioned in Australia, what financial innovation products can really make things and life easier from consumers' perspective?
Yeah, so one thing insurance has started looking at a lot more is things like, so basically, just to take a quick step back, places now like Florida and the parts of New South Wales that are almost becoming like uninsurable for property insurance, because right now in parts of New South Wales, it floods every 3 years. And when it floods, you lose the entire house. And also, you might know, but then trying to get contractors around to rebuild the houses, the social inflation of that is going like through the roof. So it's almost now becoming a massive political issue there. The premiums are virtually, if you want the full cover, it's 1/3 of the value of your house, per year to insure it, because that's what it is, right? 1 in 3. So how can insurance help with that? Then we're now like seeing insurtechs kind of trying to move into that area and offer things like parametric solutions. So monitors on floodplains where if it hits this level, your policy pays out immediately, no ifs, no buts. It's just a sort of straight contract in that space. Or there's other insurers looking in the hurricane zones in Florida and actually having a solution in that space that other people can't, because in there again, they have to get somewhere where these sorts of things are covered. And I think as you see more and more climate change, again, insurance is trying to take out a lot of this flux, because actually they're stepping in ahead of the banks, because the banks aren't losing the actual properties. It's actually the insurance companies paying the claims to keep the owners there and their houses in order. And obviously, if they weren't there, it would be a very, very different idea to get a mortgage in Florida or New South Wales or these kind of places.
Do we have clear evidence of numbers actually improving, houses losing less value, or banks coming in and they say, you know what, we still put insurance on it, and because, like, have we started to see some improvement because of the innovation in the industry? That's what my precise question.
I think the part you're seeing improvement on is the service part, as we spoke about earlier. So the idea of doing things like the flood level goes up to X and you just get paid out straight away. It stops all this idea that like insurance policies are, it's a gamble, or it's a mug, it's a racket. It is very clear it's covered. But climate change is a major issue, and like 100 years of modelling is now proving to not actually be much good, because if you change like the El Nino effect and things like that, and the winds are flowing in a different way, 100 years of lost data across North America is pretty meaningless if the last 3 are showing something different. So it's
Okay, thank you, Homez. I'm going to come to you, and the question is also for yourself as well. This is about choosing the right markets. What parameters do you really look at before you get into a market in terms of infrastructure? And with the use of a technology, how do you guys change it?
You mean, okay, so when we look at where to enter, when it comes to the brokerage arm of our company, of course, we look at the opportunity, right? So you have to enter a place usually where the regulator allows you. We like to get regulated. And essentially, there are 2 types of markets we can enter. It's the developed markets and the emerging markets. And so there are completely different sets of rules for the 2, right? So if you're going to enter, let's say last year, ATFX decided to enter Australia. It's a very mature market, regulation, everything. How do you enter Australia? Everyone's set. You can't even find staff. Everyone's got jobs, unemployment's fairly low. So how do you enter Australia? There are several ways, but one of the ways we chose was to buy a broker. So we bought the Japanese broker Rakuten's Australia business, and we then hired a set of people. Not easy to find good people, but we hired people and rebranded and set up there, and used all of our know-how from other offices. We have 23 offices globally, so to enter Australian market with mainly the institutional business. But then if we're entering, let's say, Latin America is a different story, and Dubai is a different story. In even Dubai, that looks quite developed. It's not that easy to find talent. The talent pool might be a little bit, it looks very, modern Dubai. But if you want to find someone who knows, FX trading for 20 years, you just don't find someone. You have to bring someone from elsewhere, other offices. So that's where we sort of tend to have, we can move people around and deploy our technology to help set up in those type of developing countries.
You guys are very well established for a long period of time, and you're still expanding. What are your criteria and how you are tackling it?
Our strategy has always been agile. We're not very bureaucratic. We're a $50 billion market cap entity, but globally, we only have 2,900 specialists that work in the company. We're very automated. We're in 201 different countries with 235 sovereign countries. We're almost there. I'll simplify it very quickly. When we go in, we're not looking to compete. We're looking to collaborate with the local players. Number two, we're B2C, we're B2B, so that's really important for us. In addition to that, when we go into a marketplace, we look to cut the timing. If we could have our technology cut the timing for a customer to open an account, to get access to a new market, that's a big plus to us. The next part is to cut the angle. Could we cut the angle to get to the end customer? What we don't want is a lot of complexity, and we try to take the complexity out, being able to expand in a different country. There's a lot of regulation, there's a lot of barriers because of economics, because of pricing. I have to execute, I have to go to a third party. We cut that angle because we centralize everything in our platform where we're a full turnkey solution. And the last one is to be able to control the speed. If we could control the speed for the customer to be able to access global markets in milliseconds, then that's the market that we're going to be in. The last part is the regulation, right? We haven't come across any kind of market where we can't solve because of our technology and our agile strategy. However, regulation has always been a friction point, but if all those parts play let's say, a good outcome, then we'll go in.
Orion, do you want to add something to it?
When thinking about market entry strategy, so you can pick up, there's different elements. What I like to do is when we go or we're thinking about is actually doing it from bottom up. So thinking what we have already in place, how the market reacts to some of those, and see almost see how the market reacts and then come there. So obviously there's different elements there to go into a market, but sometimes touching the water a bit, seeing how's the reaction, pilot almost before we go. That's the. And it's because we want to be lean, because, Joe talking about being agile and lean, this is part of it.
Before we go into the topic of CAPEX, and Chris, I wanted to delve into your experience from your background. Orion, I wanted to ask you, with your recent acquisition, how technology played part in producing efficiencies? Of course, you did the acquisition, but what part of a technology made the processes even more efficient?
So when we approach a target company, the first thing we look at is the people. You can talk about AI and quantum computing and virtual reality. It's all about the people. It's about the team that we see in front of us. For me, M&A starts with that. Obviously, you're not going to approach a team or a company that is not successful, is not coming up with a technology. But the first thing, it's about the team. And usually, when looking on M&A, even in the side of the deal structure, we want to keep the people. So we feel people are the engine behind it. And yes, technology is important, but the first thing we look at is the people. And then there's the layer of the technology. And then when you go into the technology, obviously you look on from a legal perspective, where's the IP sits and how are they doing? Who built the technology? What is it doing? How innovative is it? How hard is it to for a competitor to build that technology? But the first thing is, for me, is the people, who you meet first, see how they are. They're going to be your partner to some extent, at least until.
There's always human-to-human connection, which is more important. From before, I wanted to move to these gentlemen and the investment trend that we have still consistently experiencing in the technology sector is this commitment for CAPEX for technology, and then how every single tech company is still very much committed to do that. From PW's perspective and the service that you guys carry out, the question that I wanted to ask you is that how are you guys seeing the shift in the narrative, the shift in the efficiency levels by using generative AI? What is the top level approach on that?
Thank you, Naim. Well, what we're actually seeing, and I think I am going to second the fact that the most important asset is human capital and not necessarily the technology. Again, based on our knowledge and the surveys conducted, it transpires that you can have technology, but most of the investment is going into upskilling of the employees in order to facilitate the best use of the technology. Now, when it comes to generative AI and looking into the more traditional banking sector, we see that it starts being used in various roles. For example, in information gathering, in searching into contracts for anomalies, into content creation, like creating emails, media campaigns, into translation models, which this is one of the best uses currently. And even in code generation, translating text to code. However, we also see that banks, they want to promote technology, but by their nature, they are risk averse, so they are not as, let's say, flexible or as aggressive as fintechs in promoting this technology. So currently, we see them mainly using that internally for internal processes and purposes before they use it to more, let's say, customer-facing tasks such as loan underwriting, in assessing the financial position of customers, entities, or physical persons. So we believe that it's penetrating even the more traditional segment of the market. But it's going to take a few years still until it, let's say, replaces most of the processes. And that doesn't mean that it's going to displace staff in terms of workforce numbers, because you definitely need to retain staff. And as everybody said, even in making deals or moving into new jurisdictions, one of the key factors to determine about a new acquisition or a relocation is the availability of human resources. The technology, you can, of course, find it anywhere or develop it anywhere.
Gary, you guys are a listed company. Obviously, CAPEX is an important part of the equation. And I'm mindful of you guys are listed companies, and there are certain things only up to certain things that you can go to. But how important is CAPEX, and where do you think that the companies, not precisely yourselves, but should be investing more within the brokerage company to make processes more efficient? You can talk about the interactive brokers, I don't mind, but I'm just being concerned about being listed.
We're very highly regulated. Hopefully this is not going to be online and my compliance officer is not going to tackle me. From a personal perspective, you've had to invest in technology a long, long time ago in order to catch up. The costs are exorbitant, right? And that's basically, that spread's going to widen. when people talk about AI, I mean, AI has been around for a very long time. It just starts to really regurgitate right now for over many years. I think personally that the new gold is going to be the data, right? Because you talk about AI, but these AI applications are driven by quality data. A lot of people don't realize that that data is being exchanged. Regulation came into Europe and the United States where you no longer could go on a website and search, and basically the companies like Google, et cetera, were able to take that data and they could resell it and they could use it to power their AI applications, et cetera. However, regulation has now changed that and said you have to make sure that the user has the ability to say yes or no. However, the individual, by doing that, is going to have the opportunity to sell that data and to market that data. So to me, the new gold will be the data. And I think actually in our lifetime, you're going to see that going to be traded like a stock, et cetera, because AI, generative, machine learning, if you don't have the quality data, and these data sets are the gold to drive the Lamborghini, then realistically, it doesn't matter what you have, the output is going to be no good. So to me, it's to keep an eye on the data, how it's going to be monetized.
You know, this is really interesting because very recently I was reading a patent from Apple's AirPods. The new patent that they filed, they have special sensors which can measure your wavelength, your brain's wave, and then it can measure what you are thinking, what impressions you have on your face, whether you're smiling or what exactly is happening. So, you know, speaking of monetization of the data, how much you want it to give and how much you don't want it to give, it would be very interesting. And Alex, I wanted to ask the insurance question to you, on that particular element to you. But before, I wanted to, again, continue with you, Holmes, about the CAPEX investment from ATFX perspective.
By the way, I think data is very valuable and is maybe gold, but this year I prefer gold rather than data, to be honest.
Bitcoin?
But so the question is whether, you know, what's to invest in, right? You know, for us, it's you know, we just go with what the market trends are, right? If the investments are within, you know, if the world is rebranding machine learning into something called AI, and it's been going on, it's not something that suddenly people are using AI. It's a machine learning evolution that's been going on for maybe 25, 30 years. So if we need to invest more in machine learning, we do that. We just announced partnerships, acquisitions, etc. So we're doing more and more with data that helps risk taking, for example. That's the key element for the AI and risk side, we think. So to be able to serve the clients and take more, what people say, more difficult trading flow. So we're positioning ourselves by investing more into the tools to be able to take more difficult flows from the market and clients.
Alex, I wanted to understand the insurance perspective from the exploitation of the data.
So, yeah, insurance obviously has tons and tons of data, and it's really, obviously, like medical data, things like that, it's a huge thing to mine. But I think there's got to be, right now we've invested a lot, and we have our own like ring-fenced AI system at Marsh. I think we're the only broker that does, and we're taking it really, really seriously, because if a company puts that data in, we're putting client data into an AI system, which is an open source. If you just had open source, you're literally throwing your client data to all ends of the earth. So I think it's going to become such a big thing, this sort of, you know, due diligence on suppliers and things like that, and how they use your data is going to get hypercharged. The part I'd see now that's starting to like come in is deepfake technology is causing a lot of increase in fraud. You've seen in Hong Kong, there's been a number of frauds in the sort of 10 to 15 millions where they've been able to impersonate CFOs on a Zoom call, making fraudulent transactions and sort of approving those on there, and it's frightening. And when we did the Marsh survey of all companies worldwide on what the number one thing most CEOs are worried about, it was actually, because it's the year of election, is disinformation. And I think people are underplaying this idea of like how much disinformation could be coming out this year. And when we're talking about volatility in the market and things like that, and being able to like during a US election or UK election or Indian elections or, French elections now, being able to put out fake stories very convincingly with deep fakes is a massive thing. And I think we all sit here as, big companies and wanting to make sure you keep your brand awareness, but it's going to be a real challenge on some of those points.
Orion, now since we are talking about uncertainty, which could be fueled by geopolitics, elections, whatever, where do you see the opportunities from the client's perspective? What area would you like to see it to grow more, or what do you think the area is going to grow more in the face of these particular elections? Where do you going to see the most of the volume interaction from the trader's perspective? Because in the audience, I'm sure, while we have a lot of B2B, but at the same time, these guys are also investors as well. So on your platform, where do you see the most amount of interest?
So I think when we think about uncertainty, people talk about, okay, we're going to weather the storm, we're going to let it go. But, you can harness the energy of storm. You can enjoy that. So uncertainty is not necessarily a bad thing if you understand or you have the tools to harness this energy and make it something that is impactful for you. I would think that given what we're seeing now, we're seeing a lot more demand for emerging markets, actually. So you'll see people, I think it's also the young generation of traders, they're more interested in volatile markets, they're more interested in looking into ESG or things that are more sustainable. So from their perspective, this is one thing we've seen. The other thing, they're keen to learn. So what we've seen is that a lot of them are just looking to learn from experienced ones. So if you look on our, the biggest investors in the world, whether it's the Peter Lynch of the world or Warren Buffett, the ability of those people to have access to what they're doing at the moment, what we've seen is that a lot of them are looking into, okay, what are they doing? How can I mimic what they're doing? I think it is related to the data that we're talking about. Data is now, everyone can actually access data very easily in a sense of understanding, knowing, learning. And the third thing is education. What we've seen is that a lot of them want to learn. They want to pick up the tools that allows them to trade. I would say even invest for the long term. So what we've seen is there's a lot of demand for education. So education that allows them to learn how to trade, what are the macro elements that they need to be aware of, what others are doing. So that's something that we've seen.
Naeem, I must say, it's surprising though that having, like you mentioned, this is the year of elections, right? 60 plus countries are having elections in 2024. Some of the biggest countries in the world are having elections, India, etc. And everyone's expecting volatility to go up. And I'm really surprised that it hasn't. Something's going on where, I don't know if you want to call it desensitized markets or whatever it is, volatility is staying low while we're having all these events. And also, if I told you that there's going to be a war between, I don't know, two superpowers, you would think a bit of volatility. We're having NATO at war with Russia, essentially, and we don't see the volatility. So the big test is going to be the US elections, maybe, and see what happens there with the volatility. My guess is maybe nothing will happen. Everyone's expecting a lot of volatility this year, but it's not happening.
Chalo, what's your expectations on that? From the volatility perspective, do you think that we will see a surge in the volatility?
I think, the elections are already in the market, no different than when, the markets don't change because of economic factors, and I think that that's what you're experiencing. The real change of the volatility is going to be when the individual takes office. That's when they start implementing, or they come against a barrier in the United States of Congress not allowing them to do X, Y, Z. That's, to me, is going to be the trigger point, whether it's, left, middle, center, no matter where you are. I think it's pretty much embedded already in the elections, in the marketplace. You're not going to see a spike in volatility, but when that individual gets into office and starts triggering their plan or their strategy, that's when the volatility is going to kick in. So that's what I expect.
Gents, it has been an absolute pleasure for me to host you today over here. And I wholeheartedly want to thank you, Chris, Gary, Ramos, Alex, and Orion. Have a great time, and thank you very much for staying back. Please give them a big round of applause. Thank you.